G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And in this episode, I'm going to be talking about where I would invest my money if I had $10,000 right now. So thank you guys so much for watching. Please make sure you like and subscribe to this channel. It really helps to get these videos out to more people. So we have two options here. One's the really boring safe way, and one's where we actually put together a portfolio of growth companies. So if you have $10,000 and you want to find a really safe way to invest over the long term, then the best way to go about that would be an index fund that tracks the S&P 500. So this is a tried and true method of making a lot of money over the long term. You know, we don't know what's going to happen in the short term. It'll go up, it'll go down. Who knows? But the S&P 500 will return an average of 7 to 8% a year. You know, if you buy yourself an index fund such as VOO from Vanguard, the VOO, as some people will call it, then that's a great way to make money. But, of course, we want to make more because we are young, dumb, and stupid. Yeah! Yeah! So some people gravitate towards cryptocurrencies, and this might be a great way to grow your wealth. In my case, I love stocks and I understand stocks and businesses on a high level from running my own business. So obviously this is going to be more risk, more reward. So keep that in mind. These stocks might go down more than an index fund, you know, make your own decisions when it comes to this stuff. So if I was going to have a portfolio, this would be the breakdown. So the first thing I'd be looking at is industries of the future. Something I've talked about heaps on the channel, massively growing businesses in massively growing sectors. So we're looking at things like aerospace, blockchain, fintech. So these sectors are going to be very important going forward. You know, things like AI. So some examples of companies like this would be Palantir, Coinbase, Virgin Galactic, Voyager Digital. There's some examples. So I'm actually going to give a breakdown of what I would actually do with the stocks that I would buy from this sector at the end of the video. So make sure you keep watching there. See, normally in the next section, I would say large cap tech stocks are a great way to go. But they're so bloody expensive at the moment. It's just crazy how elevated those valuations are compared to the mid and small caps. So if these weren't so expensive, I'd be saying companies like Facebook, Amazon, Shopify, Nvidia, PayPal, Square, all of these are amazing companies and have fantastic revenue growth, but they're all just so expensive. I just don't know if they're worth what the market is currently paying for them. Nvidia is probably my favorite out of these, but in the current market, I'd be looking at mid and small cap stocks that are tech stocks, and I think they're a much more attractive valuation as a general rule if we look at the PE ratios of various sectors. So for me, something like a Firm might be a great deal here. Now, this is a buy now, pay later company. They've just done a deal with Amazon. I need to do a lot more research into them, but based on what I've seen so far, they look like a pretty decent investment. And of course, they have a market cap of around that $40–50 billion mark. So they're not huge, massive tech stocks. So this is probably something that I'd look at if I had a portfolio that was about 10,000. I want to build that out. Obviously, you know, you need some diversification. So a sector that I think is always going to be growing over time is the financial sector. So these are companies like, say, Goldman Sachs or JP Morgan. You know, the banks are just always going to do well. And especially in the future with interest rates are probably going up over time, then that means that they're going to be generating more income for their businesses. So financials is a great sector, which I think is going to perform really well over time. And of course, at this point, it's still worth a punt in the travel and leisure sector. So there's some great opportunity here due to some of these stocks just being absolutely beaten down massively because of a global issue which everyone has heard of. So there has been a lot of beating down. So there is potential for some value plays here. So things like Wynn Resorts, but of course, you know, you need to be careful of the China risk there. They have some exposure in Macau, and Southwest Airlines, but of course be very careful of the level of debt that comes along with airlines. It's something to keep in mind. You know, they run quite leveraged. So, you know, when the times are good, they're great. But when the times are not so good, you know, the government bails them out. So it's all fine anyway. So we have some diversification there. We have industries of the future, we have tech stocks, we've got financials, and we've also got travel and leisure. Of course, you could diversify even more if you want to, but I think if you're trying to build a portfolio, it's really important to buy high conviction stocks rather than spread your money out. You know, if you have like $1 million that you're investing, or $10 million you're investing, maybe it makes sense to be spread a bit more broadly. But with $10,000, it's a small amount of money. You want to try and maximize the return on that with as little downside risk as possible. But of course, you can afford to take a little bit more risk, because a 10% decline, $10,000 is nothing like a 10% decline in $10 million. So that's something to keep in mind. So this is the breakdown of the portfolio that I would build with $10,000. If someone said, build me a portfolio right now, I'd put $2,000 in Coinbase, I'd put $1,000 in Palantir, $2,000 in Affirm, $1,000 in Nvidia, $2,000 in Goldman Sachs, $1,000 in Win, and $1,000 in Voyager Digital. So that's basically the breakdown. We've got a wide variety of stocks there in different sectors, in the financials, tech stocks, industries of the future, and of course our travel stocks with not too much exposure, because it still could be quite a risky sector. So it's worth having some exposure to diversify your risk. But of course, you don't need a ton, you just need some, I would say personally. So I actually, after building this portfolio, I went and had a look at the 1 year performance of how this portfolio would have done if I bought it, all these stocks a year ago. So I was actually really surprised at how well some of these stocks have done. So I'm going to start with the worst performing stock out of all of these, and that is Coinbase. But the thing is, we only have 6 months worth, because Coinbase IPO'd about 6 months ago. So since IPO, it's down 20%. So we'd have $1.6 thousand instead of $2,000 in Coinbase. But the rest of them are all looking pretty good, especially the last one. So if I invested in Palantir, I would now have $2,500. Affirm, I would now have $3,000. Nvidia, I would now have $1.5 thousand. Goldman Sachs, I'd actually have $4,000. Win, I'd have $1.3 thousand. And in Voyager Digital, this stock in the last year has just gone insane. If I invested in this company 1 year ago, I'd have $15.3 thousand in Voyager Digital. So all of these stocks have actually gone up quite a significant amount, with the exception of Coinbase. But of course, in the next 6 months, who knows what's going to happen, and that'll be a little bit more of a fair comparison. So the portfolio was $10,000, but if I invested this a year ago, this portfolio would now be worth $29.2 thousand, which is a total gain of $190,000, which is fantastic. Now, of course, the market has been going up pretty significantly over the last year or so, but still, this particular portfolio would have drastically outperformed the S&P 500, which is really the goal. If you're doing anything better than that, you're doing something right. Otherwise, you should just invest in an index fund. So of course, past performance is not indicative of future performance. And when you're investing, you need to make your own decisions. There's a couple of companies in here that I'll actually be looking at a little bit more closely, such as Affirm, Palantir. If I can wrap my head around that business model, it is very complicated. So you shouldn't be investing in those kind of things, I personally believe, unless you fully understand that business. So that is my breakdown. So it's 10K. You don't need a massive amount of stocks. You just need some really high conviction ones that you've done your research on, have great revenue growth, have great net income that's increasing, their margins are getting better, all of those sorts of things. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. Really helps to get these videos out to more people. So I have a link to Stake if you want to do some investing. So I have a link to that, and once you put money in the brokerage, you'll get yourself free stock, and that could be Dropbox, GoPro, or Nike. And of course, if you want to track your net worth and see that grow over time, I have a link to WeMoney. They'll give you $5 just for signing up. It's literally free money from WeMoney, which is fantastic. So thank you guys so much for watching. Please make sure you like and subscribe. We're nearly at 1,000 subscribers, so it's very exciting. My name is Seeney from the Australian Wealth Channel. Subscribe, and we'll see you later.